The whole inflation story today, the market, the government, the Fed, companies, everyone feels this is a transitory event. We can get through it, no problem. The reality is 6 months from now, we'll be in the middle of processing a lot higher prices in everything that you can imagine. And you're going to have to decide at that point whether it's really transitory or not. There's probably enough evidence that people will be concerned, and they're going to look for a name that has a direct link to it. Copper is one of these all-in types of names. Goldman Sachs did a great piece on copper and Freeport as an example. Everywhere you go, you're going to need more copper. We don't have enough new mines. We just haven't opened enough of them, and the price is going to go up. And that's the kind of name that an investor will have to gravitate to, particularly at 3 or 4 times EV to EBITDA. It's just too cheap. And the same is true of Diamondback on the oil side. We just don't have enough ready-to-market supply for so many of these things that investors directly linked to inflation and will want to embrace.
David, let me turn to you because I think your thesis is a little bit different. When I look across your plays, I see a lot of dividend yields that, wouldn't perform as well if interest rates do move up meaningfully, but also less of a concern. So I'm talking about, your ownership in Verizon, Amgen, even Becton Dickinson, Viacom. Tell me why these are names that you think investors should own this year.
So what you've had is a rolling recovery over the last 6 to 9 months. So the things that did perform well in 2020 have started to do a lot better in 2021. Value has come back, industrials have come back, financials have come back. We think that's going to continue. The stocks that we're highlighting today are things that have not participated in the rally. So we think they're going to be the next leg. At some point, valuation is going to matter again. And the stocks that we highlighted here are selling at 12 to 15 times earnings, have very good prospects. In terms of the Verizon, it's down on the AT&T Discovery deal, which really shouldn't have any impact on it. In fact, it makes them probably in a better competitive position for the next 12 months. And we think that yield is going to be important. If interest rates do start to rise, we think these stocks can still do very well. We also like financials, which will do well in a rising rate environment. They picked up very significantly this year. We think that's going to continue. Last one, Viacom. We think the Discovery Time Warner deal highlights the value of content being king. Yeah. And we think the assets are worth a whole lot more than that. They're one of the few properties that are remaining, and they have a powerful franchise at a great price.
Shepard Smith here. Thanks for watching CNBC on YouTube.